Yeah, so income tax was introduced by Sir James Wilson, who's the finance minister, first finance minister of British India, who's considered also as the father of income tax, and he got the assent from the British on 24th of July 1860, which contains totally 259 sections. Yes, and he what British used to collect tax from Indian. Then later on in 1992, because due to proper registration form and due to this World War and everything, they used to collect tax with great administration power, so that they want to have a proper income tax. So for proper administration, they introduced the act, Income Tax Act 1922. Then from 1922 1956, 29 times the it got amended. Then chairman, who's the director of administrative inquiry committee, his name is Mahavir Tyagi, and he submitted a report on 30th 11 1959. So from Income Tax Act 1922, it got replaced to Income Tax Act 1961, which got effective from 1st April 1962. This is the basic introduction. Okay, how the tax got introduced. Now, society, why do we need, why is government charging tax? The government is charging tax because so that the government can run the country properly and also develop the country. These are the main two reasons government what is asking money from the public. Yes, and Article 265 clearly says that you cannot charge tax unless you have a proper authority, and who authority of law. And how do we have to have a proper authority of law? So the law needs to be framed by the government. Law needs to be framed by the government. Yes or no? Yes. So how can law be framed by government? With the help of Article 246 of the Constitution of India. Yes. So 246 read with Schedule 7 in List 1, Union List, entry number 82. The Parliament has power to make law, and Parliament has made law regarding what, sir? Superb. Taxes on income other than agriculture income. Whereas in list 2, state list, where state government has the power to make law, and they have made tax on agriculture income. They have the power to make taxes on agriculture income. Yes or no? Yes. Then Income Tax Act, are we going to study, or income tax law? What are we going to study? Something we have to study. What are we going to study? Income Tax Act or income tax law? We are going to study income tax law. Yes, just for the, not just for the namesake. Even ICI has instructed you to study income tax law, which we saw earlier, which contains Income Tax Act 1961, Income Tax Rules 1962, then Finance Act, Circular, Notification, Legal Decisions of the Court. First, Income Tax Act. When did it come into force? It came into force on 1st April 1962. And who and all it is applicable to? It is applicable to whole of India. Yes, excluding Jammu and Kashmir, no. Along with Jammu and Kashmir. And have they given separate definition for India? Yes. In section 2 clause 25 they have given separate. What does it include? One, territory of India, territorial waters, seabed, subsoil, continental shelf, exclusive economic zone, and airspace. Sir, yes or no? Yes. Then there are totally 298 sections containing 23 chapters and 14 schedules. Sir, yes, sir. Yes. Now, sir, what does a section in an income tax contain? What does a section in an income tax contain? It contains proviso, it contains explanation, it contains subsection, it contains clause. So what do a proviso contain? We saw a section contains proviso. What does a proviso contain? It contains exceptions and modifications. Yes. In a section or subsection or clause, it can contain exceptions or sub exceptions or conditions. Now, what about in explanation? Explanation, it carries clarification regarding any particular word or sentences. A clarification, yes or no? Yes. Explanation talks about it. What about subsection? Subsection, sir. So subsection means each part is related with the other. Generally, what is subsection means? Each part is related with the other, and all subsection combined is combined becomes a concept. Yes or no? Yes. Then what about clauses? It is independent to each other. It is what? It is not related to each other. Sir, yes or no? Yes. What is income tax rules and what is income tax rules? Sir? So what Income Tax Act is trying to do, that income tax rules will help to do it. So for example, depreciation, if you want to calculate, you have to know what is depreciation rate. That is mentioned in income tax rule. If you want to file a return of income, then what is the form for you to file the return of income? That will be that form will be mentioned in income tax rules. Yes. So who income tax rules? Who has the power to make rules in income tax rules? Yes, sir. That is CBDT. What is CBD? Central Board of Direct Tax. And what is Central Board of Directors in regards to income tax? Who has the power to administer it? Who has the power to administer the income tax? And CBDT, who is under the control of CBDT? Lot of people, but CBDT is in control of Ministry of Finance. Ministry of Finance, and CBDT cannot go against Income Tax Act 1961. So yes or no? Yes. And what is notification? If you want to amend or make any changes in the income tax law with regard to notification, CBDT has the power to do it. Yes. And what is circular? And what is circular? So if in regard to specific provision, for clarity of income tax, there's some meaning and what is scope regarding a particular statement or a particular word for you to for income tax department, to have a very good clarification, circular is being released. So tomorrow department should not be in a question mark, but if assessee is in favor, assessee will say yes, okay, fine. But if assessee is against this circular, assessee can go to the court. That is what binding on department. Yes, but the department has to follow it, and it is not binding on assessee. And income tax. If who makes income tax? Lawmaker has made income tax. Yes or no? Yes. And what is income tax rules? What is notification? What is circular? That has been implemented. That is an implementation of law. That is what law? Income Tax Act. So that properly Income Tax Act can be complied properly for proper way to comply the Income Tax Act. Income tax rules, notification and circular is being issued by Central Board of Direct Tax. Yes or no? No. We saw legal decision of the court. What is this? So if there is a fight, if there is a dispute between income tax department and the assessee, what is an assessee? For just now, it is income tax department. In this class, we'll say we will define what is an assessee also. Do not worry. So in a fight between income tax department and the assessee, who's there? One Supreme Court and High Court. Yes, they are the ones who handle the fight, the dispute. So High Court, whatever decision High Court passes regarding that jurisdiction, any other person can say that as per this decision, you can give in favor of us. Yes, for example, Maharashtra has given a decision. So regarding the Maharashtra High Court, another person can come and say the Maharashtra High Court has given this decision, and you should give a favor also for us as well. But what about Tamil Nadu High Court? If Maharashtra High Court gave a decision, should Tamil Nadu High Court judge, should he give the decision? Yes? No, he should not give the decision. Yes? Yes or no? What about Supreme Court? There is only one Supreme Court, so it is applicable to everybody. No. So what is this regarding to court? It is what, sir? It interprets. It interprets what? It interprets the law. That is what is court. So it interprets the law. Yes or no? Yes. Person includes one is individual, which is a natural person. Next, HF. What is HUF? Hindu undivided family. Is it defined as per income tax? No, it was defined as per Hindu law. And who is the senior most person called as? He is called as Karta. And what is he is the head of the family? Yes or no? Yes. Next, who and all are the members of HUF? Every family member, including the wife, daughter-in-law, and son-in-law. Then what is called as co-partner? If the HUF is having any assets, if those assets wants to be transferred to any member, to which member the assets will be partitioned, that is called as co-partners. Yes. So four degree of members, which is the fourth generation, only for the fourth generation, though only for those co-partners only this will be given. What and all are though? What and one male lineal descendant, for example your grandfather, then your father, then you, then your kid, yeah, then your son. Yes or no? Four generations. Also daughter, with effect from 6th of September 2005, even daughter is also what? And HUF. Next, but we will not include wife, we will not include son-in-law, we will not include daughter-in-law, and you do not require more than one male or more than one female to form a HUF. Yes or no? Yes. And there are two types of law. What are the two types of law? Superb. I mean, what are two types of Hindu law? Schools. One is Daya Bhaga. Sir, Hindu Daya means Karunai, which is showing empathy. Daya. Bhaga means run. Daya Bhaga. If you know Hindi, this might help. Next, Mitashara. Next is MIT. MIT school, Shararat. In MIT school, you would be Shararat. What is Shararat means? You will be naughty. Just an example. So in the Daya Bhaga, which it will be applicable for, one is West Bengal, next is Assam. And for Mitashara school, it is applicable for all other states. Yes or no? Yes. And in case of Daya Bhaga, only if the grandfather dies, the father will get the property. Yes or no? And only if the father dies, the son will get the property. And if the son dies, then only grandson will get the property. Yes or no? This is Daya Bhaga. And what about Mitashara? When you are born, the day you are born, you get the right. The day you are born, you get the right. Yes or no? Yes. And we even saw company. Yes, we even saw company. What is company? There are two types of company you have to know as per income tax law. One is domestic company, next is foreign company. Why do you have to know these types of company? Because of different tax rates, especially. Okay, so domestic law, domestic company, what are the types of domestic company? One is, of course, if it is registered as per Companies Act 1956 or Companies Act 2013, it will be a domestic company. Also, if the company declares dividend and pays the dividend in India, company declares dividend but it pays the dividend in India, and that dividend which has been paid in India is also taxed in India. It is taxed in India. Then in that situation, it will be considered as domestic company. Every other company is a foreign company. Yes. And firm means what? Generally in our head, firm means it's partnership firm. But no, as per Income Tax Act, if you see in income tax law, if the word firm is mentioned, it also includes LLP. It also includes LLP, limited partnership. Yes or no? Yes. And what is AOP? Association of person. What is BOI? Body of individuals. So what is this body of individuals? Only individuals will be covered. But in case of association of persons, along with individual, HUF, company, firm, everything will be covered. Yes or no? And what do they do? Association of person or body of individuals, they jointly have a purpose, they jointly have a common purpose, and they earn income, but it is temporary. It is third one, it is temporary. Fourth point, they should not form a partnership agreement. Yes or no? If this is formed, if this is there, it is an AOP or BOI. Yes or no? BOI means only individuals. Yes. Local authority. What is local authority? Municipality, panchayat, all these are local authority, and they can earn any types of income, but it will not include salary. Yes or no? Yes. Next is artificial judicial person. What and all you saw above will not be considered as what? Artificial judicial person in a situation. Then in that case, you will fall in the artificial judicial person. If in case of above, company, individual, HUF, AOP, BOI, local, if you are not falling under any of the above category, then you will be a AJP, artificial judicial person, that is called as residual head. Example, temple, university, board, bar council and everything. Yes or no? Yes. So we saw the person definition section 2 clause 31. Then we saw there are generally before income tax law we know two types of year. One is calendar year. Next is financial year. We don't have to remember calendar year. We have to only remember financial year. In financial year also there are two types of years. One is previous year. Next is assessment year. What is previous year? In which year? In which year you earned income? That is called as previous year. And in the tax you are paying for that year, the tax which you are paying for the income you have earned, that is called as assessment year. Yes or no? And in case of assessment year there are only 12 months, starting from 1st of April ending till 31st of March. But in case of previous year, generally that is from 1st of April to 31st March. But if you are earning a new source of income, or you have set up a new business, then the day the new thing has started, whether setting up a new business or setting up a new source of income, that day will be considered. Example, Anim started new business on 20th of September 2023. So what is the previous year? 20th September 2003 to 31st March 2024. And what is the assessment year? 1st April 2024 to 31st March 2025. Yes or no? Yes. And we have also seen what is an assessee, which is defined in section 2 clause 8. What is an assessee? Any kind of tax you are paying, or any other sum of money you are paying, such as interest, penalty, fee and all, will for to whom? To the income tax department. To under this act you are paying to income tax department under this act for them. Next, any proceeding taken on your income, or any proceeding taken on your income or any other income. Income, honest income, loss, or any refund. If due to any loss, due to any refund, due to any income problem, for example, I don't know what example I gave you, but for example, 1 lakh rupees. You are telling that you are earning only 1 lakh rupees, but income tax say no, I have seen your bank statement and everything. As per the calculation, you are earning 10 lakhs, you will be eligible for what? Tax. If then there is what is happening, a case is happening, proceeding is happening. Even though it has not been proved, that you are earning 10 lakhs, still what, sir? Still you will be considered as an assessee, even though it has not been proved. Any proceeding, any case is going on, you will be considered, yes or no? Yes. Or assessee deemed to be an assessee, such as a trustee, or legal representatives. Your son is not going to pay the tax because your son, for example, is just 10 years old. Then your father is going to pay the legal representative, yes, and deemed to be an assessee in default. Example, deduct if you have forgot to deduct TDS. In that situation also you are an assessee. Yes. So section 4, we talked about charging section, where at prescribed rate tax is being charged. Yes, and tax is charged on every assessee, and tax is levied as per the provision of this act, especially and tax is charged on the total income earned during the previous year and assessment year. Yeah. And we have seen the few tax rates. We have seen what is an assessee. We have seen what is total income previous year and assessment year. Yeah. And what is income? Income is generally revenue in nature, but it is not capital in nature. So revenue in nature is taxable unless in the Income Tax Act it is specific said that it is exempt. But in about capital nature, it is generally exempt unless it is specifically mentioned in capital gains chapter that it is taxable. Yes. So there are 5 heads of income. What are the 5 heads of income? Income from salary, income from house property, profit and gains from business or profession, capital gains, and income from other sources. These are the 5 heads of income. Yeah. So from this 5 heads of income, if you want to arrive at gross total income, what and all you should add and what and all you should subtract. You should add clubbing of income and you should subtract a set of losses. Yes or no? Yes. And if you want to arrive at total income, you have to reduce from gross total income the chapter 6A deduction. If you do this, then we arrive at total income. Yes. And we have seen income tax rates. So, yes, sir. So, there are two types of rates. One is for individual HUF, AOP, BOI, and artificial judicial person. What are they? One is old tax regime. Next is new tax regime. What is old tax regime's income tax? There are three sets. One is general. One is general. Second is a person who is a senior citizen, which is of age 60 to 79, and he is a resident. Third one is he is a super senior citizen who is of age 80 or more and he is a resident. And third one is general one. Yeah. So these are the three ones. In case of general, what is the tax rate? Up to 2,50,000 nil, more than 2,50,000 to 5 lakh 5%, more than 5 lakh to 10 lakh 20%, more than 10 lakh 30%. In case of senior citizen, up to 3 lakh nil, more than 3 lakh to 5 lakh 5%, more than 5 lakh to 10 lakh 20%, more than 10 lakh 30%. In case of super senior citizen, up to 5 lakh nil, more than 5 lakh to 10 lakh 20%, more than 10 lakh 30%. Yes, sir. But in case of new tax regime, what is new tax regime, sir? What is new tax regime as we discussed? So this is for the Gen Zs and this is for the millennials as well. And what does it talk? That those who are Gen Zs and millennials, they earn money, they immediately spend on all the electronic gadgets and food items. They don't do the savings. So they don't need any exemptions, deductions. Whatever they earn, it goes to the tax. So that regarding old tax regime, it is not much beneficial for them, but new tax regime, it is beneficial. So Nirmala Sitharaman ji thought that this is a very great initiative. So she came up with this new tax regime. This is a default tax regime. This is a default tax regime. What is this default tax regime means? If you did not select the old tax regime in particular, then it is defaultly you are going according to new tax regime, the default tax regime. Sir. And you'll be calculating as per the total income of old tax regime what is the tax rate, and as per the total income of new tax regime what is the tax rate, and which is more beneficial for the assessee. According to that you will go. This is how you will plan. Yes, a normal individual cannot plan old tax regime, new tax regime. What is the reason? A person who does not know income tax act or income tax law cannot do this. The reason is there are conditions regarding a new tax regime that have to be complied. What and all are the exemptions which is allowable for new tax regime? What are the exemptions? What are the deductions which is allowable for old and new tax regime? All this is particularly in income tax law which a normal citizen cannot understand. Only a chart accountant. Yes, good. So up to 3 lakh it is nil. More than 3 lakh to 7 lakh it is 5%. More than 7 lakh to 10 lakh it is 10%. More than 10 lakh to 12 lakh it is 15%. More than 12 lakh to 15 lakh it is 20%. More than 15 lakh it is 30%. Sir, I spend so much time in this area, even in revision, is because tomorrow you have to see what even during sleep. If you do not revise any other provision, it's okay. But even during sleep, you have to know this tax rate. It's extremely important as a chartered accountant. Yes, and health and education says for both old and new tax regime. You know that for both old and new tax regime, there is health and education says. Yes. So first point and second point, and even for round off also, new tax regime and old tax regime is applicable. Yes, and third point, there is no tax rate. For third point, there is no point regarding new tax regime. Why? There is no age for new tax regime. Yes, only for old tax regime, 60s, 80 and all is applicable. 80 years is applicable. Yes. What is rebate? With regarding to old tax regime, rebate, if it is applicable for you, it has to be one, you should be an individual. Second condition is you should be a resident. Third one is your total income should not exceed more than 5 lakh rupees. Sir, yes or no? If that is the situation, tax payable or 12,500 rupees, whichever is lower. But before you calculate health and education says you should calculate after rebate. Yes or no? Yes. And also you have to remember one point that you can do discount, which is the rebate of any income other than long term capital gain under section 112A. Yes or no? Yes. Then we have seen special tax rate. What are the special tax rate? One, long term capital gain under section 112. What is the tax rate? If it is before 23rd July 2024, then it is superb. Then it is 20%. Otherwise, if it is on or after 23rd July, it is 12.5%. When it comes to long-term capital gain under section 112A, then which is before 23rd July, it is 10%. Now it is 12.5%. But after reducing what amount? After reducing 1,25,000 rupees. Yes or no? Yes. And short-term capital gain under section 111A, what is the amount? If it is before 23rd July, it was 15%, which got increased to 20%. Casual income, online winnings, and crypto. What is crypto? Virtual digital asset, which brings to 30%. Yes or no? Yes. Then we saw regarding surcharge. So what is surcharge, sir? Tax on tax, yes or no? And what is the rate? So old scheme, new scheme. First we'll see. Okay, we'll see both together. If it is up to 50 lakhs, nil. Both the tax regime, it is nil. If it is up to more than 50 lakhs, up to 1 crore, what is the rate? 10%. More than 1 crore to 2 crores, what is the rate? 15%. More than 2 crores to 5 crores, what is the rate? Think properly. More than 2 crores to 5 crores, what is the rate? 25%. More than 5 crores, what is the rate? 37% only in case of old tax regime. But in case of new tax regime, more than 2 crores means you should blindly say what 25%. I have even circled it. I hope you also encircle it. And points to remember regarding section 111A, 112, 112A, and also dividend. These four incomes, you have to give maximum surcharge of how much? Maximum surcharge 15%. You should not go beyond 15%. Sir, yes or no? Yes. And margin relief, what is this? Sir, because you have gone a little more, we have gone a little more of 50 lakhs, 1 crore, 2 crore, 5 crores. Because of that, surcharge becomes applicable. Because of surcharge become applicable, you are giving more tax than you earned income. You are earning, for example, some 1 lakh income. You are paying tax of 1,30,000 or 1,40,000 rupees. Yes, because of that, government has given you margin relief. What is margin relief calculation? Tax on total income, including surcharge, minus total income minus limit minus minus 50 lakhs or 1 crore or 2 crore or 5 crore. Tax on whatever is the limit. Tax on limit. Yes or no? Yes. And totally tax on this is the margin relief. Then you have to calculate tax payable. Tax on total income minus margin relief. Sir, yes or no? Yes. Or after calculating all this, then only you have to calculate health and education cess. There are few situations where you earned income in that previous year and you are being taxed in the previous year itself, not in the assessment year. So what are the situations? Number one, as per section 172, if you have a ship and you are carrying on any passengers, goods, livestock, or any kind of mail, but you are a non-resident. Then ship is only allowed to leave the Indian port if you have paid tax in the previous year itself. But if you are able to make some arrangement and you're making sure you're making them satisfactory, that you will do the arrangement of filing the income tax return and paying the tax within 30 days of departure in the previous year itself, then it's okay. What you can leave the port, no problem. Yes. Then we saw section 174. What is 174? If you are an individual and you're leaving abroad and you have no plan of coming back, yes, an assessing officer is also appears to find out that yes, you will not come back. Then in that situation, before leaving India, assessing officer may say that pay tax whatever you have earned till the departure in the previous year itself. Yes, and next section 174A, where association of person, body of individual, or any artificial judicial person has been formed for any purpose, but whether they have accomplished that purpose or not, it does not matter. They have dissolved that association of person, body of individual, artificial judicial person. Pay tax in the previous year itself. Assessing officer may ask him to pay, yes or no. Yes. And section 175, if you are avoiding tax by transferring the property, assessing officer may say you to pay the tax. As per 176, if you are discontinuing any business in the previous year, assessing officer may say you to pay the tax. Yes, these are the situations where you will be able to pay tax. Then we saw what? We saw search and seizure. Yeah, and we saw how will the raid takes place as per the movie Raid. Yes, we saw this is how step by step. If you want to read again, read it. I even we took notes also. And but we want to focus here. Why did I teach you all this here? Undisclosed source of income. If there is an undisclosed source of income, then you have to pay tax of 78 percentage, where 60% is basic tax plus 25% surcharge and 4% cess, brings you 78%. So what are the different types of undisclosed source of income as per section 68? If you there is one is cash credit, so which means in the books of accounts there is some X amount of money being mentioned, but you are neither are you unable to do any kind of explanation, say any kind of explanation, or you are unable to give any kind of satisfactory explanation in the opinion of assessing officer? Then whatever you have earned, whatever in the books of accounts it has been credited, will be considered as deemed income. One, or else if you have said that in the books of accounts that this is loan taken from some person, two things should be there. One, you have to give an explanation or a satisfactory which is a satisfactory explanation should be given. Let's look at here. This is the loan agreement, and also the person who has given loan, what even he also may be inquired, and what is the source of income, what is the source of income, so that he can give X amount of loan to you. For example, he gave 1 crore loan. Is he having a source of 1 crore? That will be asked. Second, the same way, if the person has opened a closely held company, which is a private company, and he has the company has given shares, and some other person has paid share application money for it. So the for the share application money, the inquiry may take place, and those who have given share application money will also be inquired. They will also ask the source of income, the nature of income, were you able to have such X amount of money to pay share application money, all that will be inquired. If they are able to give explanation, fine. If you are unable to give, then that will be also considered as deemed income. Yes. Next, unexplained investment, section 69, where nothing is recorded in the books of accounts, but you have made investment and you are unable to give any kind of explanation, or the explanation is not satisfactory. Then such value of investment will be considered as your deemed income. Yes, in the previous year itself. Next, any kind of jewelry, bullion, or any kind of valuable article that is not recorded in the books, and you are unable to give any kind of explanation or satisfactory explanation, then in that situation, what is the value of it will be considered as deemed income in the previous year. Or section 69B, where, for example, the value of 1 gram, actually the day you bought was 5,700 rupees, but in the books you have mentioned is, for example, 2,300 rupees. The difference is 3,400 rupees, and you are unable to give any satisfactory explanation. What will happen? Exactly, the difference amount, which is for 3,400, will be considered as a deemed income. This is what we have seen. And for that, if you are unable to give, but only if you are unable to give any satisfactory explanation. That is a very important point. Then, as section 69C, where you, for example, your source of income is yearly 10 lakh rupees, but you have an expenditure of 90 lakh as Benz. You bought a Benz, you bought a Harley Davidson bike. Yes, you bought a lot of bungalows. Where is the explanation? You are unable to give a satisfactory explanation also. What happens? That expenditure will be considered as a deemed income. Even hundi, if you are paying hundi, if you are getting borrowings from cash or you are repaying it, any one of that will be considered as your income. Whether you are borrowing it or you are repaying it will be considered as your income. But the hundi, if it is made through cash,